Hi everybody, this is Alex Deploy from Expert Forex. Today I'm just going to share an idea on the weekend straddle. This is discussed in a little bit more detail at Forex Trading slash watto.com and best described when you look at a chart. Now, what often happens is that there could be eventful weekends that happen, like G7 meetings, or even economic announcements or political announcements that might occur over a weekend. And what then happens is that what would happen on your broker dealing station, or even on their charting statement station, is something like this would happen. This is the Friday close, and the price would just oodle along and close at a certain level, and then on Monday morning it would suddenly open at a different level due to the economic announcement or a news or event that happened during the weekend. So let's have a look at how we take advantage of this. And this is a high skill trade. It's also a novelty trade. You can't make a living out of it, but it is fun sometimes for this to happen. So the type of thing that you would do is you would look at you would find out exactly when your broker closes his dealing station at the end of a week. You would then at that particular time, you'll wait for the last 15 seconds of the last minute of his open, and you would then place two orders, a buy order and a sell order, roughly 7 pips is normally a good distance to place them from the close of the Friday station. So you would put that and put a buy order, and you'd have a sell order going that way. And you could put in a target into that order. But sometimes people don't even worry about targets. But you can put in a target if you like. The trick now is on Monday morning, you should know exactly what time your broker's dealing station opens, and you should be right in front of your dealing station. So what will happen is the price would suddenly appear. It will have activated your buy order there, and the price will appear, and what you can then do is just manually close the deal as it opens, and you could make that profit from a purely technical trade. Quite nice, isn't it? And these gaps happen virtually every weekend, so you could do that. It takes quite a lot of skill to put the buy and sell order in the last, let's say, 20 seconds of the Friday, and it takes a bit of skill to wake up on a Monday morning in order to get this done. But sometimes it's well worth it. This particular trade resulted in 400 in 70 pips. So this was a 70 pip trade on the pound quite a while ago, and now there are a few pitfalls to this particular trade. Firstly, the brokers don't like it, so don't go and discuss this trade with your broker and ask for his advice. What you need to do is do your own homework. Make sure that your broker will honor the entry that goes when the price jumps from here to there, that he'll honor that entry. Some brokers don't, others do, and the trick for you is going to be to find the broker that's still fast asleep, that still honors that move. Other than that, the other thing obviously that you need to do is cancel the sell order the minute you cash in that buy order. So, and the other beauty of this is a traditional straddle transaction, but because it consists of a gap, there is no chance of a whipsaw. Most straddle transactions have a risk of a whipsaw. In this particular case, there's no risk. So, look, take this trade and play with it a bit and enjoy it. It's a novelty trade. You can make a bit of money out of it, but it's lots of fun. And also the risk reward is absolutely fantastic. Yeah. Um, your risk is minimal. These deals do not whipsaw, so you and if there were a very quick whipsaw, like it's never really happened, but if it were to go whoop whoop on the in the first minute of the Monday, you stand to lose 14 pips, because it's 7 pips up and 7 pips down. So really a nice low risk trade for you to play with over a weekend. So from me, Alex Deploy, and Expert Forex, good Forex trading.